So, I mean, the three powerful forces, the three horsemen, as we call it, the dollar index has slipped to a 2.5 month low from 107 sort of levels to about 103 now. Crude prices have moderated by about 14-15 dollars from their recent peak. Bond yields have slipped by about 60 basis points or so. Overall, the setup, at least in November, is looking fairly positive. But given the kind of returns that we have seen in the past couple of weeks or so, do we expect some bit of consolidation to, play ahead?
Hi, Suyash. Morning. I think, look, all the three reasons or factors which you have pointed out are playing very well out in the market, especially on the US market front. Look, so if you see Nasdaq and S&P per se, they have almost like a 7% kind of a rally in the month of November itself. I think easing of oil is one of the biggest boons for India. Which should ideally play out, and which we have also seen in the OMCs stocks being played out in the market in the recent rally, right? And the US yields easing off and the dollar index easing off, I think both are kind of correlated out there, which is what is fueling the rally in Nasdaq and the IT stocks in US per se. Yesterday, I think the Meta stock was up, but that was for other reasons. But per se, I think the US markets have been doing fairly well. In comparison, if you see Indian markets for the month of November has been more like in a range kind of a setup. They're more consolidating, or they're more kind of spending some time around that level. My sense is market are just bracing up now. And I think we will have some triggers on and off coming here with the elections. I think 3rd of December is the result date for the
Right.
assembly elections, right? And I think that should give market the first impetus, and from there on to general assembly elections, there will be a lot of infra announcements in the market. There will be a lot of capex which will go. There will be a lot of public sector spending which will go in the market. So all that should augur really well for the market. So my sense is market is just about spending time this month around that level, and hopefully we should see a trigger on from here on.
Now, talking about how much, uncertainty we have going ahead, Indian markets have been a relatively, underperformer in the emerging market basket. We have underperformed South Korea and Taiwan. But given the kind of earnings season where we have had phenomenal earnings growth, about of 14 to 16% in the September quarter, far ahead of these geographies. Do you expect, with the three big factors also favoring emerging markets, and FIIs also turning buyers in the November series, do you expect this, Indian market to outperform that emerging market basket?
Look, Sush, I think it's a matter of time. Honestly, I think FIS turning positive this month is a great story. DIs have always been positive, and we have all been talking about the DI flow and participation in this show itself for a fairly long while now, which has kept the market where it is. But with FIS again turning positive this month, I think it's a great story. My sense is, look, public sector spending will spike up till about general elections, and then we should see some private sector capex announcements post the elections, and both should augur well. If you see, one of the leading brokerage houses has also come out with a report of around 21,400 or thereabouts level of Nifty by December 24. So my sense is markets looks extremely positive. We obviously can't expect supernormal returns from these levels. We're at a fairly elevated levels. But given the earnings season, given the way the election season should span out, there's public spending which will happen, the way consumption is shaping up in the festive season, and now we have the marriage season on. So I think all those factors will contribute, and plus the winter crop also seems to be moderate. So my sense is all these factors clubbing up together, plus oil moderating. Uh, at around $80 a level. So I think all these are extremely positive triggers for the economy. So hopefully it should help the markets as well.
Now, talking about elections in the five state, do you think market will perhaps take cues from the state election if there is no continuity with the ruling party? Can we see a notable sort of a correction if the results disappoint?
Look, Swish, I think honestly, markets know very well that the assembly and the voting trends in the assembly and general elections are fairly different. And we have seen that for last 3, 5 odd years that the Indian voters have now evolved to a level where they're voting very differently in assembly and voting very differently in the general elections. Having said which, if the rural party suffers a huge blow, by a big margin in those leading North Indian states of Rajasthan and Madhya Pradesh, then perhaps it could be a bit of a jolt for the market. But however, it doesn't look like that given the way the opinion polls are coming in and all other factors are indicating. Even if it is a marginal loss or a victory in any one of the states, I think market will take that in stride because people are fairly well aware that the voting patterns are different now. So my sense is I think general election will have its own shape and trajectory and markets will follow it very differently.
Now, one of the things that we noted on Friday, which has had a big impact on the banking and the financial space, was RBI tightening the noose on unsecured lending. Now, one of the repercussions, as I understand, please correct me if I'm wrong, is that, personal loans will get expensive. Now, do you expect that to impact, demand in consumer durables, especially since Q3 is a seasonally strong quarter for us, given the festive demand that we see, given the wedding season?
Look, I think bulk of the season is almost behind us, Suyash. Now it's just a matter of around a month, which will perhaps, which is perhaps even maybe till December mid or December end is the peak of the buying season. But we are bulk of the season of the festive period is already behind us. But I think it was a very timely action by RBI because RBI has been raising this point of a very loose credit policy being followed and a lot of personal loan market as in growing out of proportion, a lot of fintechs entering that space. And I think there was always a prevailing a sword which was hanging. And I think RBI has been very timely in that action. So, and whatever impact on particular names and stocks was to happen, it has already happened. And I think market has already factored in. We have seen stocks of SBI cards, RBL, Bajaj Finance being hammered for last 2 odd days. So I think the market impact is already done and dusted to a vast extent.
Anything that's looking attractive in this banking and the financial space, sir?
To be honest, I think with the price action which has happened on Bajaj Finance after this news, I think it was always an attractive stock in the NBFC space. I think there is no comparison. It's the market leader by a mile. So my sense is it still looks very attractive from these levels. I think we're fairly bullish on Bajaj Finance.
And another sector that has been in focus is the Nifty IT pack, sir. Like I think it was the outperformer in yesterday's trade. Overall, in the last 1 week or so, we have seen 7% or so rally in the Nifty IT pack. And even the big stocks, the top 5, top 6 stocks like your TCS and Infosys are also participating in that rally. Do you think that this rally is more sentimental in nature, given that there are only talks of US perhaps not going for that additional rate hike come December, or perhaps thinking about rate cuts by FY25, or are we seeing any sort of situations change on the ground as well?
Suyash, if you recall, I think it was your last session or maybe last time when we spoke, I was fairly bullish on the IT index per se. And I think that was one of my favored picks. And it still continues to be for fundamental reasons, honestly. I think with the rate cycle turning around, the IT pack should definitely work well, which has historically been the case. There is a kind of inverse correlation out there. With the yields easing off, the IT pack looks extremely attractive, not with an immediate view, but yes, with a 6 months to a 1 year kind of a view. I think the IT pack is looking very attractive. We've already seen Nasdaq running up. We've already seen US tech stocks doing exceedingly well for last month or 3 months kind of a period. Right. And even in India, if you see the leaders in the IT pack, the large cap names, they've kind of bottomed out in terms of correction or re-rating, if you might as well call. They're all extremely good capital allocators. They're very, very efficient capital allocators sitting with huge cash piles on the book. So there is not too much headroom for the market to derate them further. My sense is there is a bottom formation out there. Names like Infosys, TCS, even Tech Mahindra for that matter. We see a strong, sharp bounce back in all these names from here on. Though it might not happen immediately, they might still consolidate further for around a month or 3 months from here on. But with the 1 year view, we're extremely bullish on these names.
So another sector that is buzzing, and perhaps it's on probably on the back of a fall in crude prices, is the OMC companies, the oil marketing companies. The likes of Indian Oil, Bharat Petroleum, Hindustan Petroleum have given double digits return in the last 1 month or so. Is that in a sweet spot, given that we have seen considerable amount of correction in crude prices, and overall the prices have pretty much consolidated, and they are not taking cues from that Israel Hamas conflict that we are seeing playing out?
I think what is playing out in the market is the correction in the crude prices, honestly. But this is a very tricky trade, Suyash, and I've always maintained that these are the most sensitive PSU stocks out there in the market, and touching these stocks in an election season is extremely risky. Look, the windfall tax rates from the government have been changing. Government has again reduced the tax rate, and that is again one big trigger out there. But if you see the trend across the assembly elections, various parties have been rolling out SOPs against the LPG prices. Basically, so you never know how that election season pans out and what happens to the freebies or the SOPs being around the LPG prices, the kerosene prices, and even the fuel prices for that matter. Having said which, I think the all the OMCs have turned green this quarter. Last quarter, quite a few of them were showing negative profitability, but this quarter they are showing huge profitability given that the crude prices have fallen off. So as of now, yeah, the trade looks good, but again, we kind of stay away from this pack. There's too much of what do you say, government intervention, and given the election season, will stay away from this.
Now, sir, one of the things that in the last few times that we have chatted is that you have been extremely cautious about the primary market and the overall activity that we are seeing in the IPO market. Now, we have a flurry of IPOs this week, and today we have a big one coming out in IREDA, which will be the first government offering since LIC came out back in May 2022. Now, this is a pure play green finance company, and even the green finance space, the renewable energy space, has been gaining a lot of traction. Is IREDA a buy? Should one look at IREDA as a a good long-term bet?
Suyash is raining IPOs, honestly, and I think specifically talking about IRDA, it's after a long that a government company has come out in the market. It's obviously an OFS plus fresh issuance, which the government of India will offload some stake out there. Look, I think it's a very attractive space, and plus, whatever the good part about government companies coming out in the public market is that they always leave something on the table. At around 32 rupees, which is the upper price band, honestly, the price to book earnings will be around 1.2 times, and the P multiple will be around 6 times, which is fairly reasonable. And I think there is a lot which the bankers have left on the table for retail investors to make. However, I am not very sure how much allotment will the investors get. The issue size is fairly small, and but with a long term view also, if one has to enter in post the IPO, even then I think it makes sense, given that the space is very niche and the government has very ambitious goals around green financing. Though you can always contest that the balance sheet health compared to REC and PFC of this company is relatively weaker. However, the NPA provisioning has been reducing for last couple of years, and hopefully, I think things should improve on the profitability front and the NIM front also further. But yes, for a long-term investment purpose and even for listing gains, I think it's a shouting buy.
All right, IREDA, a shouting buy for listing gains as well as long-term, long-term portfolio benefits. Sir, Mohit sir, always a pleasure talking to you. Appreciate you joining us here on First Check.
Thank you so much, Suyash.